This is the Financial Survival Network. Now more than ever. The Financial Survival Network.
And welcome. You are watching and listening to the Financial Survival Network. I'm Kerry Lutz. Today is Monday, April 19th, 2021. Well, what's going to happen with cryptos? Are they going to crash like 2017, or is this just a minor little flash crash and they'll go racing back and hit $100,000? What do you think about that? Why don't you send us an email and let us know? In the meantime, our good friend, the show, John Rubino, is with us, dollarcollapse.com. And we're talking, John, about crypto volatility. But hey, you had some charts there, and margin debt is going through the roof.
Hey, Kerry. Yeah, those are separate things, cryptos and margin debt, but they're both interesting stories today. The margin debt story is basically that's debt that overexcited investors take on when they borrow against their stocks to buy more stocks. Okay, so when that's a really prevalent thing in the market, that's a sign that people are just too overexcited. They've been making too much money for too long. They think they can't lose, and now they want to turbocharge the process by using leverage. But one of the interesting things about the chart, the historical chart for margin debt, is that the steeper the increase in margin debt, the bigger the crash in stocks that usually ensues, which makes intuitive sense. And it's also, visual, something you can see. When that line goes straight up, it won't be long before stocks go straight down. And just in the last few months, we've had the biggest, straightest up increase in margin debt ever. And basically, the reason for that is that the government is just flooding flooding the country with money because of the COVID lockdowns. And a lot of that money is going directly into the stock market, which is getting everybody excited, which is leading to more margin. So anyhow, if history is any kind of a guide, margin debt says that there's a crash coming. And the mechanism for the crash is also related to margin debt, because when stocks start going down even a little bit, the guys who borrowed to the hilt in order to buy more stocks get what is called a margin call, where their cushion shrinks to the point where the broker calls them and says, yeah, you know what, we're going to have to sell your existing stocks to pay off the debts on your other stocks. And so that starts the snowball rolling down, because they're selling in order to cover debts, which pushes stock prices down, which forces more selling. And so that's why the spike in margin debt is frequently followed by a crash in stocks. And so we've got the biggest spike ever in margin debt. So we'll see what it leads to. But it's definitely something that you want to pay attention to because of its historical value.
Okay, so what about people who actually don't just do margin debt, but they actually take out credit card debt, advances, and then they put it into a margin account and they margin the debt, and that's like supercharging it. There's a term for it. I think they used to call it, when you did cocaine in its purest form, freebasing. That's like freebasing debt. That's like getting intravenous injections of debt, because you just can't get enough risk. You're a total risk junkie. And of course, what could possibly go wrong, right, John?
Yeah,
well, go wrong.
But see, that's what happens to people when things have been going too well for too long, because you start to think, first of all, that you're a genius, that it's not the environment, that it's you making these decisions because you have some extraordinary ability to predict the future. And second, that the future is going to continue to be like the immediate past. That's the human brain extrapolates out, from the intermediate past to the intermediate future that way. And you combine that, and any amount of debt is fine because it's going to result in an even bigger win at the end of the process. And people get suckered in, and then they get crushed, and it happens over and over again. And not just regular people, not just retail investors. Hedge funds are subject to this, and regular mutual funds and pension funds. Everybody gets too excited. And you can see examples of that everywhere in the everything bubble, right? Anybody who's buying government bonds is subject to the same kind of criticism, because you're buying at crazy price levels, which is to say insanely low yield levels, which means you're going to get creamed at some point. So all of this stuff is going on out there, and it's just margin debt is a really visually easy to understand indicator, but there's lots of others. And but yeah, and I guess this is a good segue into cryptos. Because that's where the crazy money has been made lately. And it's 2 or 3 crypto stories. Okay, one is that a guy just lately, as chronicled on Zero Hedge, took a stimmy check, put it in Dogecoin, made $1 million. And because Dogecoin, which was a cryptocurrency that was created as a joke, has just rocketed up. It's outperformed any other crypto in terms of percentage gains lately, and Peter Schiff is having fun with that. He's a crypto critic. And so, and people on the crypto side keep telling him, look how much Bitcoin is up against gold. Clearly Bitcoin is a better form of money than gold. And now he's saying, well, by that logic, now Dogecoin is a better form of money than Bitcoin, and so it's fun to watch what's going on out there. But this last week, something interesting happened, because Coinbase, which is the biggest Bitcoin exchange, went public with a valuation that dwarfs, the NASDAQ or the New York Stock Exchange or anything like that. It went at an insanely high valuation in terms of the other entities that are like it in the world. But the stock didn't trade that well on its IPO. And then it turns out that the insiders at the Coinbase are selling massive amounts of their stock. Like in one case, it was like an insider was selling like 95% of his stock into the IPO. And that spooked the crypto markets and caused Bitcoin to fall. It trades over the weekend. So it fell by like 15%, which is, on a $65,000 security, a 15% drop is major money. And so now everybody's kind of spooked and disoriented with the Dogecoin soaring and Bitcoin tanking and Coinbase maybe being a scam. And so the crypto market has been kind of roiled by all that. So we'll see what it leads to. It might be nothing, it might just be another growing pain in an emerging asset class, or it might be, the final sign to a lot of people that this may be a bubble as well as all the other bubbles that are out there.
Well, if you're a chartist, John, and look at these charts, I was talking to one trader today, Christopher Mullen, and said, have you ever seen a chart that went parabolic, exponential? I should say exponential, because parabolic is a parabellum and all that. But have you ever seen a chart where something went exponential and didn't come back down? And you have to think about it for a minute. He said the best case scenario is I've seen it where it's come back down, but only by 50%, which still would be a shock. And, like daily, I get emails telling me I'm a moron, I don't understand cryptos, and that it's, they're making the argument, John, this time is different. These cryptos are different. They're like no asset class that has ever come before it. Therefore, they are exempt from the laws of economics, and they can only go higher, right?
Yeah, and I don't want to completely discount that, because it's it's not money and it's not a tech stock, okay, Bitcoin. So it's something new. It's kind of an emerging asset class. So, the idea of it going from 3,000 to 60,000 seemed pretty absurd, and yet it did that. And so the question becomes, is it an emerging form of money, in which case there's a lot of other money that could flow into it, and who knows, or is it, Amazon in 1999, where it's going to drop by 90%, even though it's going to survive and thrive at some point in the future. Yeah, and I don't know. I don't know what the answer is with these things. But the charts are terrifying for most of the cryptos, because, like you said, they're straight up. And very seldom does straight up resolve in another few years of straight up. That's just not how it works, because too much of that excited money that we talked about early on tends to go into things that are going straight up. And then whenever there's a correction, which there always will be for some reason or another, you got a lot of easily spooked people, a lot of hot money in an asset that will flow right back out. And then it'll just build on itself and it'll tank. And yeah, you know, Bitcoin's done that a couple of times already. So it wouldn't be at all a surprise to see Bitcoin go back down to $10,000 in the context of a longer term rise to some kind of importance in the global monetary system. So yeah, you just can't know about any of this. I mean, you can say with more certainty that equities, which we do understand, are headed for a crash at some point, because that's just what they've done in their long history. And you do have valuation measures which allow you to compare the cash they're generating to what you have to pay to get that cash, things like that. So you have some valuation measures and you have a long history, which raises the likelihood that history will repeat in equities. And with cryptos, it's just, there's no history. There are a lot of crazy looking charts, but there isn't a lot of history to compare them to. So I'm not comfortable being as aggressively dismissive with cryptos as I am with stocks, which are just crazy overvalued. And yet, even so with stocks, you know, you've got Martin Armstrong, among others, saying that capital flows are what matters. And the rest of the world is even worse shape than the US. And so much money is going to come from China and Russia and Europe, where they're just monumentally screwed, into the US, that stock valuations don't even matter anymore. So this is a crazy time. You know, it's very hard to make any serious predictions. But I got to say, you know, precious metals look the best of all of these assets, you know, as always, almost, because they're not bubbles right now. You know, they're the only thing that you can point to and say, okay, this is fairly valued based on blah, 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 you know, the history of the way they've behaved. So I'm more comfortable in silver and gold now than in any of these other things, other than, you know, some selective short positions in stocks, which are not in any way guaranteed, but have a lot of history on their side. So I don't know.
Hey, speaking of shorts, one of our community members had a question for you. He says, so unpretentious. He mentioned his Tesla puts once when he was well out of the money on them, and only once after that, but I'm sure he cleaned up on them since. I said, have a great day. So what's with your Tesla puts?
Well, that was a nice question. Thanks to your viewer. Yeah, I shorted Tesla when it was around 880, which just by sheer luck was pretty close to the top of its run. And it's gone down since then. But I used long dated options, put options, which means there's like 2 more years for it to work out. And I haven't sold them yet, but there was a time there when I almost did, because Tesla got into the 500s not so long ago. And I thought, well, maybe at 500, you know, I'll just be safe and cash out. And then it went back up from there, and now starting to roll back over again. So, so I'm not out yet, but I'm up somewhat on those options. So we'll see. You know, that's options cool. Are super volatile. So if there's a spike in either direction, those options will move by something more than the spike in Tesla stock. And, you know, that's what I'm hoping for, is a flash crash, you know, that I can get out of, or a market crash like we're talking about, which sucks down everything, including Tesla. So either way, that's still a potential winner. And you know, Tesla continues to generate just this amazing news.
Oh, hey,
yeah, so, the latest with the. No, go ahead. Yeah,
it's going to be like Apple: buy the rumor, sell the news, right? And
well, I was thinking of the wreck that they just had lately, a Tesla car.
Yeah, like yeah, they can't figure out. The cops can't figure out who was driving it, because apparently nobody was. It was in fully autonomous mode, and they specifically tell you, like, you know, do not take your hands off the steering wheel. So God only knows what those guys were doing in the back seat, but the cops say they know that no one was driving the car. I mean, isn't that
yeah. So in other words, they got into a car, they put it on automatic, you know, autopilot basically, and then took it out on the road, thinking that it would be okay. And it emphatically wasn't okay. You know, I think they had to be swept up in a dustpan. And I kind of blame the tech industry for this because they keep talking about self-driving cars, and we are nowhere near self-driving cars. So you should not use that term. You shouldn't plant that idea in people's heads until you've had thousands and thousands and thousands of error-free hours on the road with your own people in the car, watching what the car does before you put that kind of capability or pseudo capability in a car and then sell it to regular people, because people are morons at the edges of the bell curve of human judgment. There are morons, and you don't want to put things like that in their hands. And so we're seeing what happens when you do. And it's just, it's not that Tesla cars are flawed in any way, or that other electric cars are excessively dangerous. It's just that they've got this software that the companies are kind of characterizing as self-driving, even though they use other words.
The problem with Tesla is, well, first, autopilot is not autopilot. It's not like you're up there at 30,000 feet and you tell the thing, fly me at 35,000 feet and up to speed 100 knots. It's not like that. So there's a total misunderstanding and disconnect as to what the autonomous systems are capable of. And the other thing is that Teslas are supercars in terms of speed. If you get the fast ones, the performance models, they're basically like you're driving a Ferrari or a Porsche for your daily driver. And most of you out there don't know how to drive a supercar. I'm not even saying that I do. My car is pretty fast. It might be considered a supercar from 20 years ago, but certainly not today. But cars have gotten way faster. And you're really, to borrow a little metaphor, it's like giving your kid the keys to the Ferrari and a bottle of Jack Daniels and telling him to go out and have a good time. And one other thing I just want to mention, we'll get back, is that the Tesla Corporation is not Tesla stock. Okay, they sell cars, so they could be having great news, or they could be having lousy news, and it could be completely divorced from the stocks, from the shares, and the shares could be going up or down, irrespective of what Tesla is doing in the marketplace. And I think so many of you out there lose sight of the fact that the business, the underlying business, yes, is connected to the stock, but it isn't the stock. And I think that's something that you can never remind people of enough, John.
Well, yeah, it's kind of a truism that sometimes the best companies are the best short sale candidates, because they get people overexcited and people start focusing on the story. And then they become, the term that we have now is valuation insensitive, which is a really, is a great euphemism for that happens with a lot of good companies where they just get way overvalued. So even though the company's successful, which Tesla is, it makes good products and it's really, it's a very exciting business model, but it's maybe 5 times more expensive than it ought to be based on its legitimately expected earnings. So it's a good short in that sense. And, there will be a point where it's a good buy. Like if it drops from, it's like 700 today, I think. So if it drops to 200 or maybe 100, comparable to say Toyota's or Volkswagen's valuation, because those are much, much bigger car companies, but maybe with less edgy technology. But if it drops into their valuation levels, then it might be a good buy. So the time might come when we're talking about being long Tesla on this show. And it'll be the same company, just with a different stock price. But speaking of what you're saying about supercars, that's kind of another stupid idea that we have out there, right? Where you put these things in the hands of people without, the only criteria is, does the guy have the cash to buy the car
or the credit?
And you get
credit.
or good enough credit to buy the car, which probably has to do with the guy's parents. But you give him a car that has a ludicrous mode, which is literally what Teslas have, which is so fast that the G-forces affect you sometimes. Human beings shouldn't have stuff like that. I'm sorry. We're too variable.
Not on the highway, and
Yeah.
what could possibly go wrong? Hey, so couple of stories. San Francisco, COVID went rampant there, and yet twice as many people died of drug overdoses than COVID. And who knows, maybe those people were bored out of their minds from being locked down, depressed from being locked down, or losing their jobs, losing their businesses. Who knows what you do when you lose? You know, Gerald Celente says, when you lose everything, you lose it after you lose everything. And I'm sure a lot of these people did.
Well, this is why people are moving out of California, because the government is really, I'll just say it, a bunch of morons. To allow a system to devolve to the point where you're in the middle of a major pandemic and you're locking down the economy because of the pandemic, but twice as many people are dying of drug overdoses while this is going on, and you don't mention it. What can you say? If you're there, you probably want to leave. I saw another video the other day, which, Kerry, I should have sent to you if I didn't. Maybe I did, but it was a guy who was going around and interviewing small businesses in San Francisco. And they told him that San Francisco had just passed a law, or California had passed a law, I don't remember which, where any kind of shoplifting below $900 was considered a misdemeanor now. And so all the drug addicts and everybody else knew they could go in and just pick up stuff that they wanted as long as it was less than $900. And then get this, the store staff was not allowed to confront them. So they had to stand there while these guys go in and pick the stuff up. And then those guys would turn back around, go back into the store and return it for a refund. And all of that was happening basically legally, because the government is so completely out of control, and of course a society is going to collapse in those circumstances. Yeah. And, can you imagine that happening in Texas? No, you can't. That's why population flows are what they are right now.
We just passed a law in Florida that the businesses originally, in its original form, I don't know if it passed, but that businesses would be allowed to shoot looters. I don't know if they got extra cash back on their taxes or what, but if their business was being looted, they were allowed to defend it and shoot them. I haven't seen that actually mentioned. One other thing I wanted to mention, an email from Alex. He said, wouldn't that be a great business? Bitcoin wallet recovery service. Whoever figures this out will make a killing. I was figuring, you forget your key, probably you might want to go for hypnosis if there's enough money involved, right?
See, that's one of the really sad stats about Bitcoin, is that every time its price goes up, the amount of lost Bitcoin, or the value of the lost Bitcoin out there, also goes up. Yeah. So, it was a big number before, and so you would never, if you're one of the guys who lost the hard drive that had 50 Bitcoin on it, of which there are apparently hundreds of people like that out there, you can never, the problem never dies for you, because when Bitcoin goes to 20,000, that means you lost, $200,000, but then it goes to 40,000 and your loss was actually 400,000. And so as Bitcoin goes up, your stupid mistake looms larger and larger, and it never goes away. You can never let it go because it's in the paper every day. So I'm sorry to all you guys out there who did that, but just remember, if you had silver coins, you wouldn't have that problem.
Yeah, you don't have to remember your key to take your silver out of the vault, but that has its other problems, as we know. Hey, so one of our members here said, I am 78 years old. Am I going to get my vaccine passport? Hell no. I am old enough to remember freedom. I will not bend or bow down to the globalist gods.
Yay. I see that debate is going to be a big one in the next few years, because it's really not just the vaccination thing. There are lots of things that are being tried out there that limit people's freedoms. And, are they softening us up for something big and very serious at some point in the future? Or is this just some kind of random piecemeal thing where there's no master plan? I think that's the former. I think that they're getting us used to to obeying mindlessly in anticipation of something really serious, where they're going to need us to do what we're told, and they want us to be used to it. So, I don't have anything particular in mind, but it could have something to do with the Great Reset, some aspect of that. But this sure does feel like a psychological softening up program rather than just a virus specific thing. So we're going to have this debate at some point, and everybody's going to have to take a stand. And I hope we've thought it through and we're ready to take the right stand when the time comes.
Yeah, well, there was a great article in Zero Hedge. That's kind of our Bible for all this now, because it's one site that they don't care if they're censored or whatever. They've been kicked off Twitter multiple times. But Bill Maher had a whole thing about how stupid Democratic voters are, because they were asked in a survey what percentage of people who get COVID wind up in the hospital. And between the two groups, one said 50%, the other said like 30%. Between those two groups, they were convinced that 70% of the people that got COVID wound up, or 71% of the people they surveyed were Democrats, and which was much worse than Republicans. They didn't even give the Republican number. That's how bad it was. But 70% thought that it was like in the double digits, people getting COVID and then winding up in the hospital. And the reality, as Bill Maher said, was somewhere between 1% and 5%. And then you see like places like Michigan mandate that 2-year-olds be masked. How do you keep a mask on a 2-year-old? You can't even get them to, to sit and just eat. They're throwing food all over the place, and they're going to be masked. Well,
you train them at a young age to obey. But yeah, low information voters are not all clustered on the right. Thanks to MSNBC and the New York Times and CNN, there's an ever-growing number of them on the left too. So, which might, again, be part of the same process. It's like, okay, let's convince them to believe this false thing. And now we'll convince them to believe this false thing. That way, when we really need them to obey, we can convince them to believe anything. So, we're seeing this process take place right in front of us. And it could be a bunch of random stuff, or it could be one big plan. So who knows? But it's a scary world. Yeah.
I agree with you. They're prepping us for something much more intense and crazier even than we can imagine now, because we've seen that, I've seen science that says like wearing masks, if you probably the kind of person that has some kind of speech impediment and you spit a lot when you speak, probably the masks are very helpful, meaning large droplets of saliva, they can help. But for aerosolization, they don't do any good. But the fact is, COVID's done nothing but go up since we had the mask mandates. So you got to wonder how effective they really are. The science seems to be at best mixed, and a lot of places are just blowing them off. Texas saw a decrease after they got rid of all the mask mandates. So they just don't seem to care about the science at all. Like certainly outdoors, we know for a fact outdoors, the ultraviolet rays, the humidity, the wind, everything else, your chances of contracting COVID outdoors are truly minimal. And yet, places like in Dade County, Miami-Dade, they've got an outdoor mask mandate. Now, I'm not wearing them outside. I don't care what any of them say. Plus, I already had it, so I can't give it and I can't get it. But, your antibodies might only last for 3 months, except I've got 4 people's antibodies in me, mine and 3 others that I got in the hospital. So I figure I'm pretty well off. Well, you had a notation here, John, that China expands its gold import quotas, prepping for a gold-backed digital yuan. Do you really believe that?
Well, the China thing about the increase in their gold quota is a real thing, apparently. That's something they announced. So they're encouraging, or at least allowing, their people to buy a lot more gold than usual. And at the same time, they're they're testing out the digital yuan, which will be a central bank digital currency. It'll be the first big one to come out in the world. And everybody's kind of wondering what that means. Is that a new reserve currency? If it's basically, government-run Bitcoin? And how do you value something like that? How do you judge it? How do you use it? So they're going to be the first ones to test all of those questions. And the idea that it might be gold-backed is, it would make it a lot more appealing, right, as a reserve currency. So this could be all part of the of one story, or it could be two different things. The digital yuan being tested and brought out, and China continuing to accumulate gold, which it's been doing for years and years. Either way, it's good for gold, because the overriding fact is that the biggest buyer of gold in the world is now buying more gold than it had been in the recent past. So that just takes more of it off the market, because it's highly unlikely that China is going to sell a lot of its gold in the near future, since it's accumulating it so aggressively now. So they're kind of strong hands from the point of view of other precious metals investors. So it's a good thing for gold. And, gold has had a long correction. It's 8 or 9 months now that it's been just treading water. So it's ready to start moving up again now, just for technical reasons. So, let's get through the summer doldrums when it's sell in May and go away. And then this fall might be a really good time for gold.
Well, a few chart people that I follow very closely think that could be intermediate high in May for gold. And that would be a real shocker, because the past couple of years, 19 and 18, gold went up dramatically during those summer months. And then it pulled back, and then went higher still, I think, at year end, if memory serves me correct, which it probably doesn't. So we've seen the mining stocks start to outperform the physical metal, and they're outperforming their counterparts in the broader indices. And that, on GLD, GDX, et cetera, that could be a sign, relative strength-wise. And we saw yields go up several days last week, and gold and silver went up. And even today, they barely went down, and they recovered from their session lows. So they're exhibiting good behavior, and it could well be that the correction's over. We're not going to know that for a while, but this show is over. And if you got any questions for John, just send them to me, kl@kerrylutz.com. And we will do our best to answer them the next show. Promise. I'm trying to work off a huge influx of emails. They seem to have speeded up recently. But we will answer all eventually, either myself or on the shows. And you find John's work, of course, at dollarcollapse.com. Sorry, just had a little brain freeze there. And make sure you sign up for his free newsletter. Same thing with FSN, Financial Survival Network. Sign up there for our free newsletter. We will catch up with you next week. John, have a good one.
See you, Kerry.
The Financial Survival Network.